And now with the latest news on what's happening on the markets, over to Jane Edwards.
Thanks, Alan. Wall Street notched up another day of gains on Friday, capping off its best monthly performance so far this year. Blue chip stocks had healthy rises, but the tech sector was muted. The US share market's been powered this week by more good corporate results. So far, 73% of companies have beaten expectations, which has maintained investors' appetite for shares, despite mixed news on the economy, a sliding dollar and a climbing oil price. Weakness in the US currency left the Australian dollar hovering just under $1.10 at the close. Gold hit another record and oil finished at nearly $114 a barrel. The greenback looks set to remain low, with Fed Chairman Ben Bernanke this week confirming the wind-up of quantitative easing next month, but saying interest rates will remain low for an extended period. In a shortened trading week, most of the world's major markets rallied, with Europe leading the way with a 3% gain. But Australia's market was sharply lower, as Marcus Padley explains.
Well, that was a short week, but not a great week. Our market's now been up 15% since last July. And if you add in the currency, which has been up 30%, international investors in our market have now made 45% in less than a year. And the story that continues to dominate this week has been the weakness in the US dollar, as Ben Bernanke heralded the end of quantitative easing, and that sent the Aussie dollar heading towards $1.10, which is creating headaches for a lot of our currency-affected stocks with big international businesses, and a number of those were underperforming this week. Also underperforming was the resources sector, uranium stocks in particular, but outperforming were the banks after Macquarie Bank had their final results, which were a little bit better than expected, and as nobody seems to want to sell the NAB, Westpac or ANZ ahead of their results and dividends coming up in the next couple of weeks. Otherwise, ResMed was down on third quarter results. Sims Metal was up on quarterly results. Goodman Fielder had a profits warning, blaming currency and commodity input prices. A whole host of resources companies had quarterly production numbers. Almost all of them fell, except for perhaps Origin, which I think squeaked out a small gain on the week. In other stories, Computershare made an acquisition, their largest to date, in the US, which was very well received by the market. Foster's voted in favour of splitting the company into beer and wine. We also saw Rams Home Loans, now known as RHG Limited, reject the chairman John Kinghorn's offer to buy the company at 88 cents, stunned perhaps by the fact he'd sold them the company at $2.50 at the peak of the market in 2007, only to see the share price down to 4 cents just a year later. Meanwhile, Equinox accepted a higher offer from Barrick Gold, and as China Minmetals, the counterbidder, said they won't be getting into a bidding war. And finally, Linus Corporation, one of the star stocks of the year, was down this week. They're having a few problems getting a licence for their Malaysian processing plant. The stock is still up 340% in the last 12 months. Winner of the week this week was Valad Property Group, up 51% after a bid from private equity. And loser of the week was Hasty Group, which recently collapsed after their restructure and has fallen 21% in the last week, only going to prove you shouldn't buy a shock drop stock.